All right, so today we have the FOMC meetings. They are taking place in a little under 3 hours from when I'm recording, so I'm going to try and get this up quickly. And I just want to run through what I am kind of expecting when it comes to the FOMC meeting. So, what usually happens during the FOMC meetings? If we get volatility, usually it is very fast moves, and usually they are designed to grab liquidity. Maybe we'll see a very quick move to the upside, stop out all the shorts, see a quick move to the downside, stop out on the longs, and then just kind of continue going whichever direction we were going to go. I've seen this kind of thing happen a lot. Sometimes we don't really get much volatility at all, but usually if we do, it's like some kind of Darth Maul candle that just grabs liquidity, and then later on we'll choose the direction to go. And looking at price action right now, we have lots of liquidity that we could grab. I mean, this entire move down has just been a bunch of lower highs, a lot of opportunities to short, probably a lot of stop losses up above each and every one of these highs. And to the downside, we have some liquidity as well. Probably some right down below this low, and this local price action has just been a bunch of higher lows with some liquidity below it, I would assume as well. So we have liquidity in both directions, and I think that this is prime price action to get one of those liquidity grab moves. Maybe we come down, stop out the lows first, then eventually make our way up to stop out some of this liquidity. I think that would be probably the best scenario because we are a lot closer to the lows, and there is a lot more liquidity above as opposed to below. At least just looking at price action, there's a lot more lower highs that you could potentially have your stop loss at. So it would make sense to potentially just grab the liquidity from the lows, stop out everyone that's long right now, and then start taking out this liquidity to the upside. But I could also see a scenario where we just kind of continue the structure that we were in. Like this 4 hour structure where we broke the lows and we have a lower high up here. Maybe we just come up to grab local liquidity inside of these two market structure points and then look to continue this 4 hour downtrend. I could see a scenario like that as well. And I mean, I've already went over structure previously, but on the daily, we did technically close below this last lower low. I mean, we are in a downtrend with the daily because we closed below the last higher low back here or back here, again, depending on how you look at it, but I'm counting this low. So we are in a downtrend. We have closed below this low, and we did technically close below this low as well on the daily, but if I really zoom in, it is barely a break. I mean, we closed, let's see, that's 750, just over $40 below this low. That's not really a break, especially on the daily. And other than that, we've had a bunch of wicks. So it doesn't look like price wants to close daily candles below this low, at least not yet. So I am not counting it as a break on the daily. So therefore, the daily market structure point to the upside is still up here. If we close down below there, then that would move to right here. So technically, looking at the daily structure, I mean, we could come up and grab basically all of this liquidity, still put in a lower high, and then continue this structure to the downside. Or maybe even come up just SFP this high and then still continue the structure to the downside. Either of those could still technically be a possibility because again, I'm not really calling this a break in the structure or a continuation in the structure, that is, because we haven't broken the last lower low. And another thing I was looking at was this kind of pattern that we have to the downside, this pattern that I'm sure everyone's talking about, the descending wedge. And potentially this could align with one of our plans as well. I mean, pulling up the 4 hour structure again, if we get a move to the upside to hit off the top side of this trend line again, we could wipe some of the liquidity locally. Maybe we get like a very quick move up, stop out these highs or the liquidity from these highs, maybe even get a move up into this 8 hour order block that I had marked out. We could still reject from here and then continue down from there. That is a possibility if we get a move to the upside first. And I would say if we just pump from here, we don't take out the lows first, then I would be, more interested in us rejecting from here, because I think we would still have a reason to come back to the downside because there is still liquidity down here. So if we're going to move to the upside first and we start rejecting from this area after grabbing liquidity, I'd say there's a higher likelihood that we then come down for this lower liquidity rather than breaking out of this. But I mean, we still could. Maybe we leave liquidity to the downside. But yeah, I would be more interested in a rejection from this trend line if we leave liquidity here first. And I think if we take liquidity, then I would still be interested in this stuff to the upside, but I think there's a higher likelihood then that we start coming for, some of this liquidity. Maybe we get like a fake out of this pattern, get a bunch of people to think, we're gonna, now target, whatever the target for this is, take a trend line, and we're gonna target the highs basically. But then we just end up putting in a lower high on the daily after grabbing liquidity. A bunch of people longing to, give fuel to the shorts that are going to be filled up there, and then we continue on with the daily downtrend. I think that's a possibility as well. So I would say if I could choose a scenario, I would like for us to come down and take out the lows first, maybe get a bounce from this lower trend line, basically just grab the liquidity from the downside, and get some kind of confirmation at these lows, like a low time frame market structure shift, divergences, whatever. I'd want to see a lot of trades getting stopped out as well, to basically make me think that we are going to, SFP the low again. And I think we would then have reason to come to the upside given all the liquidity above us. I would prefer this scenario where we kind of break out of this wedge type thing and then start grabbing some of the liquidity above us, maybe to then just put in a lower high. I think that would be my ideal scenario, and I think it makes sense. So that's kind of what I'm looking at right now, but I have some plans made for if we just kind of start rejecting from some of these levels up here. Now looking through Market Cipher, the daily time frame is pretty oversold. If we zoom in here, is it more oversold than it was back there? It is, but the money flow does not look very great. It took a very serious turn to the downside. It's not really showing signs of curving back up yet. It is flattening out, which is a good sign, maybe showing that this ends up being the bottom. It will start curving up later. But overall, the money flow and the momentum wave are very oversold right now. If we go to the 12-hour, it's looking better. We're seeing a little divergence with the money flow. Money flow putting in higher lows as prices putting in lower lows, and also, just kind of wicking the lows, just barely putting in lower lows. Like we put in a lower low here, we put in a lower low here. So this is looking better for sure in my opinion. We also have a slight divergence with the momentum waves. And looking at the 4-hour time frame, we also we do have a divergence with the money flow on the 4-hour, because right here, as price was higher than it was during this low, the money flow put in a low, and from there was increasing as price put in a lower low. So we got a divergence there, and overall momentum has taken a serious turn to the upside. We are kind of following like a trend line to the upside. I guess maybe we kind of broke that, but overall, momentum got a very sharp turn to the upside. We are putting a green dot right here. I would like for us to, maybe come down for one last trigger wave to the downside. Do something like this, and then that as we take out the lows, get a divergence. Kind of see the money flow continue to diverge, maybe not come down too much, and still put in a higher low relative to this. I think that would be best case scenario. Especially with this divergence that we could get if we just get a quick move to the downside. I would be really interested in something like that. And going to the 1-hour. The 1-hour is kind of looking top-ish right now. It was looking more top-ish a little bit ago. The momentum wave is kind of flopping and groping. We started to clip off here, got another move to the upside, but money flow doesn't look too bad. Doesn't look super great either, especially in the red. It's kind of looking, weak or uncertain. It would be better if we got like a really deep red wave and then started to turn to the upside as we put in these lows. it seems like if we, get another move to the downside, we could see a lot of divergences continue on a lot of the higher time frames. And I think that kind of aligns with this idea that I had, coming down to take out the lows first before, getting moved to the upside. So that's pretty much what I'm looking at. In terms of, my more local trades, I've got, my ideas set. I'm not really going to go over those because a lot of those ideas are not my own. Some of them are, but yeah, I don't feel like splitting up my ideas into, what I came up with and what someone else came up with. But I got some local ideas, and, I'm not really interested in too much trading unless it happens before or after the FOMC meeting. If some of my local levels get hit during the meeting, I'm probably not going to pay too much attention to it because, things can get volatile. If we start getting very volatile price action during the meeting, then pretty much the main areas I'm interested in would be the lows, and it'd be much harder if we get a sharp move to the upside. But I'd say like anywhere around this trend line, like this 8-hour order block, if it's like a really quick move, maybe even like peaking above this trend line, or this value area high, untapped daily, and point of control area right over here is kind of interesting. Maybe I can even pull this fib up to here and see if that aligns. Yeah, okay, the golden pocket is there as well. So, we do have an area confluence right around this top trend line. So maybe I would consider trading if we get a very quick move up there, but you got to be careful during the FOMC meetings. It could look like price is rejecting from a level, and then we can just blast straight through it. I would say I'm most interested in this low if we get a quick move down and then confirmations. Alright, well, that's about it for this video. Thank you all for watching. If you enjoyed, please consider leaving a like and subscribing. Really appreciate the support, and I will see you all in the next video.